Ain't it a great day? Ain't it a great day? Ain't it a great day? Ain't it a great day?
Hello everyone, my name is Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is August 8th, 2025. And Bitcoin and the rest of the cryptocurrency markets are at resistance and have put in a long drawn out consolidation, okay? A very boring sideways consolidation, slow, very, boring. And so it begs the question, what's next? Typically, when we get these slow sideways consolidations, they do break out violently. So I want to look at that on the smaller time frame. Guys, if that all sounds interesting to you, then watch until the very end. Hope everyone's having a great day. Let's get into it. Let's start with Bitcoin on the hourly time frame this time. So the sideways consolidation that I mentioned in the intro is this right here. We've been in a day plus long consolidation, basically just going sideways, okay? Down and sideways a bit, but pretty much just sideways for a day. It's been tough if you're following, right? Now, let's get some context. So let's zoom out for a second on the 4-hourly time frame. So you have this day-long sideways consolidation, which seems to be at resistance, right? We've drawn a channel, and that's the midline of the channel. But let's assume that the channel may not necessarily be perfect. So let's zoom out once more on the daily time frame, and let's look at the price action to the left. Okay, let's look at this. All right, if you look at all of this price action, whatever you make of it, it's a bunch of price action, and it's busy within this range, more or less, okay? And if we want to consider the amount of time this happened for, it's about 17 days. So let's just say with a high degree of probability, there is a channel of some sort here that lasted a little more than 2 weeks, and this seems to be the midline of it that we're caught at. Okay, so again, Bitcoin is currently at resistance. You can say a 2-week resistance, given that we have found our way butting up against this midline. Now, back to the smaller time frame. Now that we have a bit of context, it seems as if the consolidation that we're looking at has a particular form, and this is important because it's an indication as to whether we should be bullish or bearish. Okay, so here you have, the top of that consolidation, and then to the left you have a shoulder, and to the right you have a shoulder. To me, as an analyst, I see a bearish reversal pattern, head and shoulders bearish reversal pattern, that is confirmed insofar as you have your left shoulder, you have your head, you have your right shoulder, and that right shoulder is respecting this level right here, right? You don't have to have the right shoulder exactly lower than the head, because sometimes you have head and shoulders that look kind of funky and the right shoulder is just as high as the head. But this is the classical head and shoulders pattern where the price action of the right shoulder is a little less than the head. So this is a quintessential bearish reversal pattern that I'm seeing that we're in. That being said, it's very likely that given our read of the price action on the higher time frame, that we're at the midline of a 2+ week channel, and on the smaller time frame we have a day's plus worth of head and shoulders patterning, and add to that the quality of the price action being consolidative, right? it's a consolidation, meaning it's a move in preparation, right? People get excited by consolidations, but if you think about it, consolidations are basically preparation for a move, either up or down. A consolidation for a move up is an accumulation. A consolidation for a move down is a distribution. This looks to me like a type of distribution, and because it's slow, it's very boring. You don't have that much volatility. I do expect the breakout to be to the downside, okay? And that be to be violent. The last part of my analysis looks at what came before this consolidation right here, okay? And also, not necessarily looking at the channel that you broke down from, but look at all of this. What do you see here? This, my friends, is a quintessential rising wedge. Okay, so rising wedges in pattern analysis tend to break down. Nothing in technical analysis is 100%. So there are tendencies, but it's not correct to say that, oh, if you have a bearish reversal pattern, head and shoulders, it's going to break down, or if you have a rising wedge, it's going to break down. By and large, statistically speaking, these patterns do break down. So this is another piece of evidence to say that we're likely to break down from this level, and that our first immediate short-term target is at the bottom of the wedge, which is around 110. Okay, I think it's a little lower than 110, but it's around 110. So let's zoom out and let's look at that target. So if you zoom out on the 4-hourly time frame, you can see that you have this purported rising wedge acting at the base, jutting up against the midline of this 2+ week channel. If it were to break down, I believe that your target, your immediate short-term target, is not necessarily just the base of the rising wedge, but actually a little bit below. Then from there, you get a counter trend, and then a continuation of that trend to our ultimate target of around 98. Okay, that's our ultimate target for this initial move. That's just the initial move. So that's my read on Bitcoin. I'm still bearish for those reasons, right? Small time frame, medium time frame, larger time frame, and this is not even to mention the higher time frame when you go on the weekly and you look at all of that. So when I said in the intro, Bitcoin and the rest of the cryptocurrency markets are at resistance, it may seem, based off of people's reactions and Ethereum going back to resistance. People love resistance. That there's some things happening, XRP moving a little bit, but if you really look, everything's going back to where it went before. Ethereum went back to where it went before months ago. XRP went back to where it went before months ago. And you can see this in the Total 3. Look at the Total 3. So again, for those of you who don't know, the Total 3 is an indicator, essentially. People say I don't use indicators. I use indicators all the time. This is an indicator. It's a chart that's gathering all of the cryptocurrency assets minus Ethereum minus Bitcoin. So it's a Total 3 chart. It has everything minus Bitcoin minus Ethereum. Okay, so it's a general outlook on the altcoin space. Okay, and again, everything's going into resistance. I showed you this yesterday. You have this channel that the Total 3's formed. It's almost a month long, and you're at the midline. I said yesterday that this was perhaps a wave 1, wave 2 scenario. That's been invalidated. And the reason we know that's invalidated is if you take your Fibonacci retracement tool from the top here to the bottom here, you see the retracement is at the 0.786. Wave 2 goes to a maximum of the 0.618. So this is a flat correction by definition. So you're at mathematical resistance of the 786. So the 786 retracement is the minimum retracement for a flat correction. So that is mathematical resistance, and you are again at the midline of this month-long channel. Okay, so also now the time component is broken because you spent a little more time, considerably more time, in this corrective move than you did in this initial drawdown. Okay, so it's no longer a wave 2 situation. If I'm to count this total 3 scenario, it looks to me like something like this. Initial A, B, so that's my initial break and my initial counter. Secondary break, secondary counter. Tertiary break, tertiary counter, or pivot. So you have 1, 2, 3 pairs of corrective patterns. That is your reversal. So that's what I'm seeing. That being said, you're at resistance. Most things, if you look, are at resistance. And so what happens at resistance? You break down, especially when you're going into a weekend. I'm going to talk about that in a second. Mental note to myself, don't forget to talk about weekend price action and perhaps making a big move in the weekend. Okay, anyway, that was weird. Breaking down from here, what would it look like? Well, let's go on a higher time frame, daily. It looks like this. We're looking for our next logical level of support. On the daily time frame, it's quite clear this is your next logical level of support. That's your wave 1 right here. So if you do break down from here, total 3 comes down first to about 927 billion, okay, before making its counter move. And that counter move, we know, has to come up and retest the bottom of this month-long channel as resistance before continuing down. For those of you who may not know this chart, I'd be remiss if I didn't mention this is a simple move, and we've been tracking it for quite some time. It's basically the move before the final capitulative move before the big alt season move. Everybody's waiting for that big alt season move, right? So for altcoins to really make noise and for people to say, oh, look at this, you know, that happens, in my estimation, once we capitulate to this level. And why this level? It's because, quite simply, this right here was resistance of many months. It broke out. It has to retest. Simple. That's it. So that's the total 3. That's what I'm looking at. I think we do get at least an initial move down during the weekend. Okay, and now, speaking of weekend price action, let's look at Bitcoin. So I've said before on this channel, when we are expecting big moves in the Bitcoin chart, we're unlikely to get them during weekend price action. Why? Because you need liquidity to make big moves. Liquidity is needed, and that liquidity tends to come from traditional markets, and more specifically, the dollar. The dollar moves in a certain way. It moves stocks and crypto. And you can see a correlation between Bitcoin and the US dollar. It's an inverse correlation that's quite robust. And it's something that spans, you know, many years, maybe 8-9 years. People like to talk about M2. That's the most recent trend, global liquidity M2. But honestly, if you really are a serious analyst, you're not using M2 because there is no robust, established trend or history between the M2 and Bitcoin. There isn't. You know, M2 has been calculated for quite some time in the United States, but in terms of global liquidity, a lot of those metrics are very recent. And so when you're looking to make a correlation between two assets, and you only have a few months worth of data, that's not much to go off of, and it makes for very weak results. Weak data make for weak results, right? So I don't necessarily look at the M2. I don't think that is a serious metric at this point, given the lack of data. But I think the US dollar currency index still reigns supreme when comparing Bitcoin to traditional uh, liquidity, the dollar. And the dollar is as good as any for as a as an adjunct, or as something to approximate global liquidity, only because most of the world's trade happens in the US dollar. So about 60% of the world's trade happens in the US dollar, or did. So I think the US dollar currency index is still a very good measure for what Bitcoin does, and that's obviously a reverse correlation. In any case, why am I saying that we may get a move in Bitcoin on the weekend when I just finished saying that we typically need global liquidity, or sorry, we typically need traditional markets for liquidity for big moves? It's because it's a counter and it's a balancing move. Look, this is the initial move. There's imbalance in the chart. This would be corrected, and it doesn't necessarily need liquidity, fresh liquidity, for that correction. Another way to say this is if you study CME gaps, Chicago Mercantile Exchange gaps, you'll see that there exist CME gaps down from where we're at in Bitcoin right now, all the way down to around 60K, somewhere there. They're CME gaps. Those get filled even in off hours. And, people like to say that markets don't like imbalance. This is an imbalance where only sellers partook in trading now, only buyers partook in this trade, more or less. Now sellers rebalance the chart. That can happen in off hours because you don't need fresh liquidity to balance that, right? This is why you have a distribution channel. This purported distribution channel would basically be where all of the exchange was done, sellers selling into strength and then offloading, and that balances the books right there. So it's possible to have retracements on off hours only when, I believe, big retracements on off hours only when there's imbalance in the chart and it's not fresh new highs, right? You're not making higher highs into price discovery. This would be a rebalancing of the chart. So do look out for weekend price action that is relatively large, not just in Bitcoin, but in the rest of the cryptocurrency markets. Let's finish the analysis by looking at Bitcoin dominance, right? 4-hourly time frame, we're at support. I mentioned this yesterday. This is a multi-month support. Do expect to bounce off of support. It's very simple. This analysis is not complicated. You know what sucks about this? You know what's difficult about this? All the stupid, mindless chop, going sideways for days on end, consolidating, seemingly without end. That is what's difficult. Getting in a trade, building a long, building a short, figuring out what the hell the market's doing or when it's going to move. That's what's difficult. This read, I will repeat, is not complicated. I know a lot of people like to troll and say, oh, it hasn't happened yet. Yeah, I know. That's how markets work. They take their time before the big moves. If we got big moves every 2 seconds, it would be a bull market or a bear market. No, even then, even in bull markets and bear markets, there's time for consolidation because there needs to be a point at which people sell into strength. There needs to be a point at which people buy into weakness. That's the balance of markets. In any case, this is support. It's very clearly support. You've come back into support. Bitcoin dominance is likely to go up. If it goes up, that means the rest of the crypto market goes down for that period of time. That's it. That's the read. You know, you're at support. You expect to go up. It's support and resistance. It's very stupid simple. It's just, again, in terms of execution, in terms of the small time frame analysis, what's happening, when is it happening, that's complicated. All right, that's it, guys. I hope this was helpful, useful. Like, share, and subscribe. If you got value, consider tipping me, Venmo, Litecoin, Cash App, and do consider my crypto portfolio mentorship and consultation service. You can sign up for that at the pinned comment below. And don't forget, there is still a bonus, the 10% cashback bonus if you deposit, for any new deposits in BTCC, the exchange partner for this channel. Just click on the link, deposit more than 500 USDT or the equivalent, wait a week, and you will get your 10% back on whatever you deposited. All right, guys, that's it for me. Take care. I'll maybe see you tomorrow. Bye.
My prevalent time slot, I vocalize, too deep to localize, even when I'm right on the surface. You act surprised how I work this, but I can't lie. Many a good alibi. I'll catch you later. Visions are vividly enhanced with emphasis and amethyst to develop morale advantages which help us manifest magnanimous. We body vitals like evangelists. So listen when you're dealing with people who be revealing premonitions with precision. At least that's what I'm aiming at for now. I speak the language of the world, meandering throughout the crowd. Used to feel safe to say anything, but now it's a risk. It's hard for me to let go when all I can do is reminisce. Gone like the wind, here's where I begin. Should I smile or should I grin?